IBM just reported its Q1 2026 earnings, a critical moment for the AI disruption narrative. The central question, is the death of enterprise software thesis that knocked IBM stock down 20% in February real or wrong? In February, fears that agentic AI could automate IBM's high-margin consulting work caused the stock to collapse from over $300 to below $220. Tonight's numbers are IBM's direct answer. Wall Street expected EPS of $1.81, up 13%, and revenue of $15.64 billion, up 7.5% year-over-year, with most of that growth coming from the software segment. But the key metric for IBM's AI story is its Generative AI book of business, which captures all software, SaaS, and consulting signings tied to Generative AI. The progression tells the story. It crossed $9.5 billion in Q3 2024, then exceeded $12.5 billion in Q4 2025, the largest quarterly increase in its history. Tonight, the market expected that number to approach or cross $15 billion. Within that book of business, consulting Generative AI backlog penetration has now exceeded 25%. This is the most important data point in the entire IBM AI story. If AI were destroying IBM's consulting demand, this number would be falling. It is rising, meaning enterprises are expanding their IBM relationships to include AI implementation. Looking at segment guidance, software was guided for approximately 10% growth in 2026, driven by Red Hat, watsonx, and HashiCorp. Consulting was guided for low to mid-single-digit growth, while infrastructure faces tougher comparisons after the Z17 mainframe cycle drove 61% revenue growth in Q4 2025. IBM entered Q1 with strong guidance, $15.7 billion in 2026 free cash flow, backed by $4.5 billion in annual productivity savings. The 112-year dividend streak also remains intact. CEO Arvind Krishna recently sent a direct message to investors and customers, saying the biggest risk for companies right now is not moving too fast, it is falling behind. Analysts have an average price target of $307.75, implying 20% upside from today's price of around $255. With the stock down 13.5% year-to-date, tonight's report is the first evidence of whether the AI disruption narrative was a market panic or a genuine structural threat. The conference call with Arvind Krishna wraps up shortly, and we will have the full numbers breakdown the moment they are confirmed. If you found this helpful, hit like, subscribe to Stock Scoop Shorts, and stay tuned for more quick market recaps.